Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Joining us now from JPMorgan is Monica DiCenso. Thrilled that she could be with us today with Private Bank, but I've got to go to your Ute. You came out of Georgetown.
Yes.
And we talked just there about digital, and I'm living digital every day with a team on YouTube. You covered at JPMorgan the digital nascent experience of the New York Times. Did you ever think the New York Times? I remember arguing with people in bars with a beverage of my choice in my hand that they would succeed at this and they could get to 2 million. People said, no way.
Yeah.
Did you see the digital success of the Times coming?
It's funny. I was relatively young when I was doing this, and so you could argue that I would have been more forward-thinking digital. I actually never thought the print would go away. I just thought people would always still enjoy having a print subscription. I think the New York Times did a great job putting up that paywall and figuring out how to monetize the digital subscriptions, and I still subscribe to both print
it's
and
amazing.
digital.
I mean, were they out to 11 million?
Yeah, no, it's it's hardly the failing New York Times, as the president would say.
And JPMorgan was way out front of this with you were II and all that. Do you use
people pay for content, right? That's the bottom line.
Do you use sell-side analysis at JPMorgan Private Bank with Absolutely. High net worth, with family offices? Is there still a place there for what you used to do?
Oh, absolutely. I mean, there's a ton of value in people who are experts in their sectors. The challenge in my seat is the clients I work with can invest anywhere. So they're not beholden to one sector, one small part of a U.S. market or a national market. So we need to look across all research and make a decision based on your goals. What's the best way to reach those goals? And it could be a media company, it could be an industrial company, it could be healthcare. So that's what makes it fun. But we rely on JPMorgan's research, which is amazing, as well as others across the street.
Sure.
Your clients can invest anywhere.
Yeah.
Are they doing it? I mean, amidst the whirl of headlines that we're dealing with, I imagine there is some agita among them as well, wondering if this is the time to do it. Yeah. What are you telling them just about this environment and how they can maybe grow their appetite for taking some risk right now?
I think agita is the right word, one that I grew up using in my family. It's hard because I think people are still scarred by 22 when equities were volatile and fixed income was volatile. And so trying to convince people that in today's world, you actually have so many choices across asset classes that to me, as an investor who can go anywhere, this is like an amazing environment. Like I look at equities, US equities, I don't think you're going to get more than maybe high single digit returns this year. So suddenly fixed income looks more interesting. Ways to monetize volatility and commodities looks interesting. There's a lot of ways to get to that. Most of my clients want to get 7-8% annualized to meet their goals. There's a lot of ways to get there right now. It's not all equities anymore. The temptation for many is they go to what worked. Do they just want to keep owning tech? Do they want to go to private equity? And so we're trying to remind them to be a little bit more balanced and get out of cash.
What is the moment to get out of cash? What do you tell them about? When's the time to move?
I mean, for most people, it was yesterday or a month ago. Sure. Because you're missing, yes, cash makes you feel good, but most clients I work with still have too high of an allocation of cash. And so trying to remind them what that drag looks like, and we do a lot of analytics showing them if you stay at 20% cash the next 10 years, this is what this looks like. Whereas if you go into equities, even with the volatility you may see, the outcome is significantly better. The highs are higher, the lows are higher.
Is it just simply the yield? They're looking at 4.8% or whatever the yield is right now, and going,
coming off a long period when rates were so low, suddenly they're like, 5%. Like if I can make 5% risk free, that's great. The problem is you have inflation now, and so it's a little bit different than it was a few years ago. So that's the big challenge. And then of course the headlines we're seeing every day that you guys are talking about, that stresses people out, and so you have to remind them it's all about having a plan. Executing on that plan.
Not that, last night's dinner was a complete disaster at home. Holy mackerel. 17-year-old stomping out of the room. Good morning, afterthought. How do you handle generational arguments in a family office? Please. John, are you taking notes over there?
Yeah, I think, you guys should hire
therapists, yeah,
to come in.
We actually do have behavioral experts who
really?
work with
We've
both,
been trying to get
both
one here for
us
some time now.
as well as our
Your
clients.
strategy team, that's what they do. People like Gabriela Santos, that's what she does. Hold hands.
I joke half of my job is sort of as a therapist, the
How
other
do
half
you
as a
do it?
financial
How
analyst.
do you tell you got 3 kids and a big pot of money? How do you say to the one at the F1 races in Monaco, shut up and listen to us?
Well, first of all, I don't say that. No, I mean, listen, like, the struggle is helping the next generation recognize why and how their parents view things, what their perspective is. But then again, it all comes back to goals, right? The parents' goals are different than the kids' goals. And so what we try to do is, it's a crude term, but say bucketing. Say, okay, parents, you're trying to do this because you're going to use this money over the next 10 years. Your kids are going to use this money over the next 40 years. They can take more risk. They can be a little bit more intrepid than you might be comfortable being. And that's where, again, what's the right amount of cash for a 60-year-old versus a 20-year-old? It's very different. So we spend a lot of time.
The right amount of cash for a 20-year-old is $800. And if they go, I got to go to Steamboat, you go, okay, $1,200. That's it.
And it's, but you have to keep in mind too, these kids that age, they don't remember a bigger recession, right? Or a more volatile market. And so part of it too is educating them on like what happened in 2008 and like what that could mean for assets and how you think again about investing over the long term and sticking with it.
This is where I want to go because what do you say about normalcy? What is normal?
I would argue the last 10 years was not normal, right?
Yeah.
We weren't in a normal rate environment. And I see it both with younger clients I work with, younger people on my team, like reminding them of what volatility is really like and what a recession feels like. Because while we had a recession in COVID, you snap back so quickly. It wasn't really like a deep recession that we've all lived through.
I have encyclopedic knowledge of every loss I've ever made. And I learned fairly early on.
It's a multi-volume encyclopedia.
It just goes like the World Book when you were kids. And the S volume is very thick.
Yeah.
How do you teach family offices and family members to win from a loss? How do you sit them down and say, we went into I'm picking on Intel, and it didn't work out. How do you teach the lessons of a loss?
This is actually where I think the family office infrastructure can be helpful because you want someone who's a little bit dispassionate, separate from the family. Because the family, they've made the money. They worked really hard for it, and so the losses, they feel it more, whereas their professional team can be a little bit less emotional about it. And so I work with both parts of the team to help the family get comfortable, but also help the family office create a plan and stick to that plan. How do you handle a loss? Risk management. So again, we're not going to get everything right. We're not going to get a lot of things right. But if you know when to pull the ripcord and step aside and then wait and go back in, that's the best way you handle losses because we're all going to have them. It's just, you don't want to get married to positions. You want to get married to trades and just have some sort of institutionalized process. For me, it's most of my clients, hey, down 10%, we re-underwrite. Do we really like this? If we do, you got to buy more. If you're not willing to buy more down 10, then what are you doing in that trade?
On the long list of things you have to pay attention to, risks that you're looking at, what's near the top? So today we'll have Jay Powell opining before the Congress, maybe trying not to opine on too much before the Congress. We had these tariffs announcements, retributive tariffs. What are you most worried about? What has the most kind of determinism for your outlook right now?
I mean, if we're talking about equity outlook, clearly valuations are high. And so are investors going to be willing to pay north of 20 times for U.S. companies in a world where there's so much volatility in headlines and where we don't know where the Fed is going and when people are worried about inflationary risks? So for me, in U.S. equities, certainly the valuation risk. Actually, earnings look pretty good. We're in earnings season. The numbers are good. But I don't know that we can maintain that high multiple. And so that's the risk on our side. If you look at our bear case, we're assuming you could see multiple contraction. That's how you get south of 5,000. Again, I think that's low probability, but that's the risk to that.
Are people really in 20% cash?
Yeah. Now, again, it's for people, there's value in something that makes you feel good. Like that helps you sleep at night, okay. But again, I got to put the numbers behind it and show you what that drag does to your portfolio. It's not good.
Do you have a gold vault under the new building? I mean, gold's popping 3,000 an ounce. Is there the DiCenso vault?
Lord Norman Foster has built a gold vault.
The gold vault.
I don't personally have a gold vault.
What do you do with gold right now?
We've been talking about gold for a couple of years now. Gold was up 28% or so last year.
Yeah.
I think it's really, again, after a 28% run, hard to go long outright. That said, I have clients who don't have very high allocations. So what we've been doing, there's interesting skew in gold where people are still trying to buy calls to buy upside. So if you own gold outright right here, or you want to buy some, you can collar that position cashless. The most you can lose in a year is 5%.
Listen to her.
The most you can gain is 13%.
There's
That's an interesting
nobody
asymmetry.
in the family office is doing collars.
Yeah, collar your gold. Collar your gold. Absolutely.
Collar your gold.
Because, by the way, if you make 13% in gold, that's more than I think you're going to make in U.S. equities, and that's gold.
Wow.
Great. Have you ever broken a phone? Have you ever been on with a family office client and broken a phone?
I'm Italian. I have a hot temper, so yes, I have broken
Yes,
bones.
okay,
Yes.
thank you. Now we got to the dirt.
Yes.
Monica DiCenso, thank you so much. Really appreciate it. Head of Breaking Telephones at JPMorgan. Really, and particularly those comments on the heritage of JPMorgan coverage of our media business years ago.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
I have been remiss. We really ignored the bond market because it's asleep, which means radar up. We are thrilled that Meghan Robson is with us. She's U.S. credit strategy at BNP Paribas. I mean, there's a certain, I go back to your Brown economics with Bill Poole and all that. There's a certain point where you link in economics and politics into your bond call. Do you have to change BNP Paribas credit strategy with all that's going on in Washington?
A lot of cross currents right now, but for credit, surprisingly, the two factors that have driven markets are actually outside of politics. So supply demand, very well in balance. And credit quality, also very well in balance. So I think there is this expectation that some of these headlines related to tariffs should start to drive credit spreads. But so far, we've seen the opposite.
So spreads haven't reversed. They're still priced.
Spreads, if you look
to put it in English, they've priced to perfection.
If I think that's fair to say, definitely pricing in the credit soft landing. Since the election, IG credit spreads have been within 7 basis point range, so very narrow range.
Wow.
Meanwhile, you've seen the interest rate market, 10-year Treasury, a lot of volatility around that, and of course, if you look
I got to translate that.
Please, I'm waiting for that.
A full faith in credit U.S. 10-year yield and a corporate quality 10-year yield is 0.07% higher yield.
So the absolute spread now is closer to 80 basis points, but the range within it's traded, so it's bounced between 74 and 81 roughly.
Got it.
So
see that
very narrow range that we've traded within, or the band we've traded in, has been extremely tight, and I think it speaks to the strength of the technicals, supply demand being very well in balance, and then of course the credit cycle. We're not seeing signs of excesses. Things like corporate leverage has been very stable. We actually saw it move lower last year, and interest coverage has come down, but near the long-term median. So I think that's contributed to the stability that we've seen.
To borrow a phrase from Tom, how does a pro like you navigate all of these announcements from the president when it comes to tariffs, be they the teases that he's going to do something or sign some executive order, or the executive orders themselves indicating there's going to be a study or new tariffs in 30 days' time? How do you sort of forecast out what those headwinds might be if, in fact, we see them?
So we're not expecting headlines to drive the market at a top-down level, but there are a lot of sector implications. So we've really tried to zero in and focus on which sectors might be more or less exposed in the market. So looking at supply chains, looking at direct revenue exposure abroad, if you saw tit-for-tat tariffs, are starting points for sort of identifying those vulnerabilities. So we have, as an example, for example, autos, investment-grade auto sector, very intertwined with Canada and Mexico. In our base case, we're not expecting tariffs on Canada and Mexico to actually pan out, but if they do, that's a sector that would be much more exposed.
Well, just as a side, I looked at a chart, I can't remember from who, overnight. Aluminum is basically Canada. I mean, it's a little bit China, but everybody's got like an alphabet soup of countries like South Korea. South Korea is teens weens. I mean, Canada, when we do aluminum tariffs, we're doing Canadian tariffs. Thank you.
And there's a lot of issuers in the U.S. credit indices that are actually based in Canada or domiciled in Canada. So of course, those issuers are much more vulnerable if we see tariffs heat up. I think another area, building products. So in the high yield market, this is a sort of trifecta of policy risk, because you have higher mortgage rates, which is already weighed on the sector. You have potential immigration issues. So a lot of the building sector is exposed to undocumented labor, and then also some exposure to tariffs as well, if we see things like tariffs on steel. So that's another place that we would avoid. And then if you think about sort of hiding out, think about the services sector. So healthcare, much lower exposure. We're overweight investment grade healthcare. In the high yield market, we like cruise lines. So sector where you're exposed more to the high end consumer and services versus goods.
I want to ask you to react to something that we heard last week when our colleague Saleha Mosen sat down with Scott Bessent, the new Treasury Secretary. She asked about how he's thinking about what the Fed is doing or isn't doing. And he said the thing that he's paying the most attention to is the 10-year. What do you make of that? What should we make of the fact that he's kind of giving that primacy? That's the thing that he's mostly focusing on.
So I think that the administration's not going to be able to adjust the Fed funds rate, likely.
Although it might want to.
It might want to.
Yeah.
And so they do, in some way, have control over the 10-year, if you think about the term premium, if you think about fiscal deficits. And so if they are able to sort of reduce the fiscal deficit, that could bring down the 10-year a bit. And if you think about the constituency, they care about their mortgage rate. If you can bring down the 10-year, that is a gift to the constituency and would probably be a very popular item.
So based on this conversation, you're taking off the summer?
We'll see.
It's range bound. I mean, it's cool. There's a real stability to it. Seriously.
Carry weight. Yeah, no, there's a definite carry element. We like the triple BIG where you can get a lot of carry, and then the leveraged loan market. If the Fed does stay on hold, it's an attractive carry profile.
Meghan, thank you. Meghan Robson with us, BNP Paribas today, head of U.S. credit strategy.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We are honored to bring you today someone who grew up in the shadow of KMOX in St. Louis. One of my high points was being interviewed by KMOX with a plaque of Abraham Lincoln on the wall. This is where Abe did whatever he did. He came to New York and has made a good go of it, and it could be a 4-hour interview today. David Gura with Mr. Lander.
Brad Lander, great to see you, and definitely want to talk about your campaign and your platform, but I have to start with the news of the day, and that is this memo that came to light, I think the Times first reported last night, from the Justice Department to the U.S. Attorney's Office in New York, instructing that office to drop the charges against the current mayor, Eric Adams. I wonder what you make of that directive. Obviously, you have an acting U.S. attorney now who's in a very difficult position, whether to take that advice and alienate probably the entire staff within that office or go along with it, I guess under the expectation that whoever succeeds her, be that Jay Clayton or someone else, is likely to put a rubber stamp on it. What do you make of the news? What does it tell you about the case that this office has built against the mayor?
I mean, what an outrageous miscarriage of justice. The Southern District has a tremendous history for doing corruption prosecution. And this says, no, we want you to do corruption. Instead, they had a strong case. They're not even saying the evidence in the case isn't strong. They know he took illegal campaign contributions, corrupted the buildings department, but they just want to wreck the justice system. And unfortunately, New Yorkers are going to pay the consequences.
Do you think that the mayor should resign? There's this swirl now about should he be pardoned, should he not have these charges brought against him? Should he step down given what's happened here?
Yes, he should resign. He's effectively being extorted by the Justice Department. He's only looking out for the interests of one New Yorker, and that's himself, not even speaking up when they come to take our lunch money.
There are many layers to this. It's a two-page memo. I should say the acting deputy attorney general is an alumnus of this office, of the SDNY, which makes this even more astonishing. But there's a line, a footnote buried in it, which I flagged on Twitter and all the other platforms last night, and it's I just find it to be like an astonishing footnote. Quote, your office correctly noted in a February 3rd, 2025 memorandum, quote, as Mr. Bove, Emil Bove, the acting deputy attorney general, clearly stated to defense counsel during our meeting on January 31st, 2025, the government is not offering to exchange dismissal of a criminal case for Adams' assistance on immigration enforcement. A lot of absurdity baked in there and just the way that that's constructed. But this is something that you've honed in on in recent days. That is, was there some sort of deal brokered between the mayor and the president in Mar-a-Lago or elsewhere?
It sure looks like it. Elsewhere in the memo, it says we're doing this so that the mayor can get back to the business of fighting, quote unquote, illegal immigration. His job is to protect New Yorkers, not to do the president's bidding.
Do you agree, is David Guro's more up to speed on this than I am, and of course, Mr. Landers, so are you, that the way the language is formed, there's a threat to the mayor if you don't do what we say. We're going to bring those charges back?
Dismissed without prejudice means we will be watching every step of the way. And if we're dissatisfied with your fealty to the Trump White House, we'll bring the charges back.
The difference is Landers studied this in Chicago. I got it from Perry Mason. That's the difference.
I can't help but draw a line to what now former President Biden did in the final days of his administration, making these preemptive pardons to his son and others. Look, President Trump could have done the same thing, but there is a flex, a power move here in doing this. You talked about the longstanding independence and proud independence of the SDNY. He's testing them effectively by doing this.
I mean, move fast and break things. He's breaking the Justice Department and the tradition of independent prosecution that the Southern District of New York has long had, and that'll mean more corruption.
You say he should resign. There's another means of recourse here if he doesn't do that. You, other Democrats, could go to the governor of the state of New York, go to Kathy Hochul and say, look, you have the power to get him to step aside, perhaps force him to step aside. Is that something that you and your fellow Democrats are thinking about and indeed would consider at this moment because of all of this?
I mean, the form of removal I'm focused on right now is the ballot box. New Yorkers can get rid of Eric Adams and restore integrity and effective government to City Hall. I mean, people are fed up not just with his corruption, but with his failure to deliver. People are fed up with Democratic mayors of big blue cities who can't govern. And that's what we can elect this year.
I want to get to your platform. One last question on this, based on what you just said there. In that memo is this criticism of this case being brought close to an election. I guess 9 months out now from an election is too close for comfort for this Justice Department. As you look at this campaign, how do you see this story being a through line, perhaps the through line as you campaign, you and your fellow Democrats campaign against him?
I mean, New Yorkers know that Eric Adams has run a corrupt administration. I think it's 26 members of his administration have either been indicted or, are under investigation, including him. But he also has been failing to deliver on affordable housing, on public safety, on childcare, on just making the government run well. Right. So those will go together. What New Yorkers want is a safer, more affordable, and better run city. And that, I think, will be the through line of this campaign. That's why I'm running.
For all of you nationwide on your morning commute on Apple CarPlay, Android Auto, our new digital platform, YouTube, good morning, and subscribe to Bloomberg Podcast. An extensive conversation of our David Gura with Brad Lander. He counts the beans in New York. He's a comptroller, but far, far more with that. As David goes to your campaign, I want to frame this. I said to a family member, finally, whether you're Republican or Democrat, the former mayor of Chicago, Rahm, wrote an essay in the Washington Post. Democrats have become the party of permissiveness. That's ballot box poison. You have a history of progressivism. How does the left in the Democratic Party migrate to the center to compete?
Yeah, I mean, I want to give you some straight talk. I think progressives, including myself, were slow to respond to rising disorder and crime coming out of the pandemic. And we need to be real clear about it. So the number one commitment of my campaign is to end street homelessness for people with serious mental illness in New York City who are on the streets and subways. That is something a mayor could do. I've laid out a really detailed, ready on day one plan. Some of that is involuntary hospitalization. A lot of that is connecting people to housing and services so they're not on the subways or on our stoops, a danger to themselves and to others.
Tom and I travel, we go to Washington, go to elsewhere, and I think a lot of people like to rag on New York, like to bring up the fact that they think that the subways are unsafe, that there is a sense of a lack of good public safety in the city right now, and you can bring up statistics to push against that. But how do you deal with that feeling? What's in the zeitgeist here that if you're riding the subway, there is a danger that something could happen to you?
And both things are true. I mean, we have more private sector jobs, more office-using jobs than ever in the city's history. People do want to be here, but if you're on the subway and you just heard the story that a unwell person, a mentally ill person, pushed someone onto the tracks, and then you see a homeless person who's mentally ill in your car, of course you're anxious. I have a friend whose 8-year-old daughter was pushed to the ground last week. So it's a real issue and a perception issue. But what we do is get those people connected to housing and services so they're not riding the subways where that's not good for them and it's not good for riders. A New York City that ends street homelessness for people with serious mental illness will be a proud New York, and one that could show all those critics, look at how well we're doing, but that takes a new mayor. And that's what I'm running for.
How do you look at the relationship when it comes to transportation between New York City and the state government? And of course, the governor has weighed in on what needs to happen on subways to make them more safe. How important is that relationship? What would you do to improve that, to sort of harness that effective way to make things safer?
I mean, the city-state relationship to make the subways run well is critical. This is why I was a big proponent of congestion pricing. And when the governor put it on pause, I helped bring the lawsuits that sued to get it implemented. But of course, now we're working closely together to make sure it's implemented. Well, the numbers are great so far. Travel times are down. Traffic is down. Money is more people are on the subway. Now the city and state have to work together to deliver platform barriers, new station gates, new subway elevators, modern signal system, all the things that we have to work together to make sure it works.
I'm going to cut to the chase. It's real simple. I live in a fancy part of New York where I enjoyed a cigar in the street, and one day there's 7 police officers around me all of a sudden. And again, it's crime that you mentioned. It's the issue. It's almost like Nixon 68, 70, whatever. Brad Lander, how are you going to have a relationship with the NYPD? How do you form that? Is mayor versus bean counter going after contracts?
I mean, this is an important moment. I have to say, Jesse Tisch, who's now in there as police commissioner, is doing a great job so far, both doing reform, holding people accountable, and providing support. And that's the key.
Lone survivor of this administration.
I mean, honestly, the fact that the mayor's corruption has opened up an opportunity for reform is great. Okay. But I would love to keep Jesse Tisch as commissioner. I think she's got the right tone of accountability and rebuilding and reform and support. But how are you?
I need you to go out to Staten Island, next to where Mandolin Brothers was years ago. I need you to go to Staten Island and bond with people that look at progressives and go, you got to be kidding me. So how do you do that?
When I go, this is a connection from being bean counter. I work with the police pension fund to manage their pensions. So there was an officer, Officer Fayaz, who the mayor wouldn't allow to get line of duty benefits, and my office did. I worked with the police pension fund to make sure those officers who had long COVID could actually get their disability benefit. So I've got a track record of working with the union reps. I hope, I'll bring them out with me to Staten Island when I go to have that meeting. And I hope to do it, in a way that shows, of course, we want to support our officers. Everyone wants accountability from people who do the wrong thing, from cops and from elected officials.
I've got 3 kids in public school in this city. As much as there's been a rotating cast of police commissioners, you've had a rotating cast of chancellors as well. What are your top-line plans for the hugest school system in the country here to stabilize it? One of the reasons, candidly, why we moved to New York was the prospect of having universal pre-K. Funding has been an issue here in recent years. Your perspective, your platform when it comes to the schools in the city.
My kids also went from pre-K to 12th grade in the New York City public schools, and they were lucky to have good schools, but boy, not everybody does. So look, you need a schools chancellor who recruits principals and superintendents who support their teachers, but also hold them accountable. The state has increased the money we're getting. That's an opportunity to reduce class size, which is something that this mayor's promised to do but really hasn't done yet. It's going to be on the next mayor to reduce class size with the money the state is giving us.
And for our audience, afterthought, when she was in elementary school here on the island of Manhattan, there were 11 languages in her first grade class. I think you have to, as David says, did you say 3 offspring? I had no idea.
I mean, that's what's remarkable about this city. What other place has that?
Well, we're working at it. Okay, KMOX, you grew up with the Cardinals, which is like, I used to listen from Western New York, bouncing off the ionosphere. If somebody said to me my 10 great moments, one of them was a guy named Mario Cuomo talking to the former governor, and we said good morning to him and his family, about his time with the Pittsburgh Pirates. It was magical to hear Mario Cuomo talk about the Pittsburgh Pirates. One of his offspring may enter the race or is in it. I'm not sure the details. Is it too crowded a field? I mean, how, away from Mayor Adams' upset, how do you frame September and October to be? I mean, how do you frame into it?
Elections in June, so even sooner. I don't think New Yorkers will want to replace one corrupt chaos agent with another. This is someone who resigned in disgrace just ahead of impeachment after a dozen women who worked for him accused him of sexual harassment, who sent thousands of seniors to their deaths in nursing homes and then lied to their families about it to protect his $5 million book deal, who cut the subways, who cut 1,000 inpatient psychiatric beds, who doesn't care about New York City where he hasn't lived in 25 years. We're getting rid of one corrupt chaos agent. Let's not bring another in.
When you look at this field of challengers to the mayor, Democratic challengers, what are we going to sort out here? This is going to be a robust debate, I imagine, about the future of the Democratic Party here in New York. It's going to be part of this broader conversation about it here in the U.S. How important is it? How vital is it to have that conversation right now? What are we going to learn from this primary campaign?
Yeah, it's critical. Part of the reason in New York people shifted to voting for Trump is they haven't seen government working for them, and there is doubt about whether Democrats can govern big blue cities well. Folks like Michelle Wu are doing it in Boston. We have to do it in New York City. Get the cost of living under control. Confront and build affordable housing. Deliver on that child care and universal pre-K and 3K, and make the city safer.
Are we going to have a Gilded Age campaign? Michelle Wu in Boston's running against a Kraft offspring. There's a fair amount of money rolling around here. How do you frame out this path to June? I assume. How many people are in the race? You tell me. We don't know yet.
Right now,
you can't count that high.
Yeah, eight or so,
whatever.
And we'll see about Cuomo getting in.
What do you perceive May to be like?
I mean, it's going to be busy. For me, it's going to be a question about who people think can actually run the city well. And that's the track record I have as the city's chief financial officer with a history of actually delivering. We managed $285 billion pension fund. Our audits have saved hundreds of millions of dollars. I can make government work, and I think that's what New Yorkers want.
Let me come full circle. Brought up that memo at the top. I read that footnote, which had that innuendo about immigration policy. And let's end there. And, a few weeks back, I was out at Floyd Bennett Field and saw the shelter that had been built there. I gather it's being emptied out or has been emptied out of migrants moved to New York City. How do you approach this issue, which is one that I think is flummoxing a lot of people? Here we are in a city that has historically welcomed so many. Now we have a federal administration that is wanting to constrict that. What is the duty of the mayor of this city here at this moment where we've had this influx of people here and a lot of people who are have left their home countries in great pain? Yes, many without documents have come here to New York. What's the mayor to do?
Yeah, I mean, New York City obviously doesn't control border policy. That's, federal. But what New York City can do is help those folks get to work. I mean, we need people working in construction, in our restaurants, in home care, in healthcare. So helping folks who have work authorization get to work, helping folks get work authorization, critical. And then we can't allow ICE to come into our schools, into our public hospitals. The Brooklyn District Attorney told this amazing story about how when his brother was murdered, which is why he became a prosecutor, it was somebody undocumented who was a witness, and the defense got that guy deported.
After testifying.
And there was no justice. And, that's what we need as a city that's keeping it the place where your daughter has 11 languages in her preschool class, but we also make it work for a thriving economy and a safe, successful city.
It was unbelievable the first time I walked into that
classroom.
529, 11 languages. It's just.
Yeah.
It was. Forget about Ellis Island and all the emotion of a city. You think of Italy and the Jewish community decades ago to witness in real time.
In microcosm, yeah.
11 languages in a perfect 529 school up on the east side was amazing. It was absolutely unbelievable. One of the great moments. 2 kids from Bangladesh, not a word of English, and those teachers went into it every day. Would you say goodbye to Mr. Lander?
Yes,
see if we
Brad
get him
Lander,
back here again.
Comptroller for New York City, candidate for mayor here in New York. Great to see you.
Jack Buck is smiling on us.
There we go.
Okay.
Oh, there you go.
Jack Buck is smiling on us. Brad, there's a pothole. How many times a week do you get that?
A lot.
A lot. Brad,
Yes.
thank you so much. And best of luck. We hope to have you back here as we stagger to June.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Mark McCormick is with Toronto Dominion Bank, TD Securities. And what's so important here is McCormick was one of the first people to scream dollar resiliency and dollar strength borderline years ago. He joins us today with an incredibly important note out of Toronto, Stereotypes of a Global Trade Order Misunderstood. Mark, what are you focused on this morning in our new trade war?
Thanks for having me. Yeah, I think the number one thing I'm focused on is the dislocation between the tracking of trade policy uncertainty, which there's really good indicators on that you could pull now, versus the generally, I'd say, subdued macro volatility and the generally subdued risk conditions that we see in our risk models. So I think those things are kind of moving in the wrong direction, where trade policy uncertainty is at cyclical highs, and risk volatility and market volatility is generally contained. Yeah. So I think that is what's going to fall apart pretty soon.
On the classic game theory, good morning, Dr. Elarian at Cambridge. On the game theory of tit for tat, it's like tennis, back and forth and back and forth. Where on your calendar does the tit for tat really click in? Is it March or is it August?
I'd say it's March, April right now. There's probably, I'd say, a rolling 3-month calendar on the trade uncertainty. So you kind of have these, these understandings that the first 100 days are very important to kind of set the agenda, to figure out where the politics and all the markets are going around here. So I'd say April's a good one. And then another 3 months following that will be kind of the key benchmarks. And again, wedged in between all of this, we're still looking at data. We're still looking at economics, and we're still looking at the macro drivers, which are still very bullish for the dollar. So there's a lot of conditions that are favorable for the dollar.
Mark, how do you game out what's going to happen with these tariffs if what's really unclear, at least to me, is what the objectives of them are? We've been through the first round of this with Canada and Mexico, China as well. I was up in Toronto talking to Chrystia Freeland, who's making a run for the Liberal Party leadership there, and asked her point blank, what could Canada do to forestall these tariffs from going into place? And I gather that the Prime Minister had a constructive conversation with Donald Trump that postponed those for 30 days. But there is this X factor here of what needs to happen to get them off the table, and how does that complicate the work that you're doing, thinking about the effect that it's going to have on markets?
Yeah, I think it's an important question, because it goes back to the note that Tom referenced, and it's really about the why. Why is there discussion around all of these things? And I think if you work backwards from where we're starting from, I think a lot of this comes back to the FX market. I'm clearly biased because we're a currency strategy team and we think that everything matters for the FX market. But I think if you look at some of the things that are critically important when you look at international relations, the world has been talking about globalization for over a decade. And if you look at globalization indicators that we've been tracking, it's stalled. Economic, trade, globalization, those things have not moved. They've been sideways since 2009, since 2010. So I think if you look at this is a recalibration of the global trade order. Right. So if you want to work backwards, this is an elimination of the U.S. trade deficit. This is reindustrialization of the U.S. And this is also what is pursuit of a weaker dollar policy, or at least an elimination of the extreme overvaluation of the dollar. So I think tariffs are only they're just a piece of this. They're not the end itself. They're a means to basically adjust the trading order and get everyone to the negotiating table. So that's the way we're looking at this. And again, the way that this works is there's more asymmetry in favor of the U.S. to start all of this out.
Frame out for us loonie here right now. Just get very quickly here. What does the TD Securities call on weak loonie?
Yeah, that's that's great, because we actually have an open idea. We are basically long dollar CAD on a 3-month call option. It's a pretty simple idea, call put spread. Essentially what we're doing is we're looking for dollar CAD to kind of go through the max pressure right now. I think what's very important when you think about the trade and policy uncertainty and the volatility in markets, as I mentioned, we don't see a lot of this actually priced in. We don't think the markets have taken this too seriously, especially for a currency like CAD. We do this through multiple different ways. We look at different models, different tools, but basically for currencies like CAD and the Mexican peso, we don't see the trade and policies priced in.
Mark, that's all great, but Gurr and I are just trying to get 2 nights at the Sheraton in Niagara Falls. Mark, help me here.
On the Canadian side or the U.S. side?
The Canadian side. It's the only thing. You go to the Canadian side, they pour a better drink. Mark, it's real simple. I got a 143 loonie. Are you telling me a linear function out to a weaker Canada 150?
Yep, that's exactly it. Sadly, I just came back from a kids' soccer tournament in Florida, so I was on the opposite side of that transaction there, dollar CAD. Yes, crushed. So
Yeah,
we are looking for 150 in the next 6 weeks. That's actually essentially our target, is to get to 148 within the next month. And I think most of the pressure is going to come through the Canadian dollar right now, and then euro, China. Those currencies are next.
Like, what did the goofy breakfast cost you at Disney World?
So probably 25 CAD to kind of go out and feed a kid.
There's a real conversation about.
I understand.
Canada.
I've been there.
Help me. You've been there. You've so been there.
Have this granola bar.
Giuseppe and the fam just got back from there. Okay, bring it over to EM. Mark McCormick, the first time I saw you were in the food court reading Stanley Fischer, 1998. Everybody's too quiet about EM as far as I'm concerned. Do you have a worry about jump condition within EM economics as signaled through foreign exchange?
Absolutely. I think there's two pieces of it. There's two types of EM currencies. There's a carry currency, which is Latin America, and probably some pieces of Eastern Europe, maybe like Hungary, which was everyone's favorite carry trade till it wasn't. The other side is EM through growth and industrial policy, which is where Asia kicks in. The renminbi, the Taiwan dollar, Korean won, Thai baht, those currencies are all in those categories. The problem is I think both of those functions of EM are under duress. The LATAM carry trade, besides Brazil, I think is going to massively underperform, which it has for the last 6 months. If you look at G10 carry versus EM carry, dollar performance as a G10 carry currency is outperforming EM when you do a risk adjusted. So there's two sides of this. Again, I think the trade uncertainty, the slowdown in the global economy more generally, those things are going to see the EM Asia currencies continue to weaken in the short term. And again, the EM carry trade is going to see in the Mexican peso, the Colombian peso. It'll probably see Brazil outperform, though, but those two baskets are going to underperform for at least the next 3 to 6 months, and that's kind of our view on EM currencies.
Gary, get one more in here. He's fired up today. Mark's fired up.
I saw a line in your note. Have to ask you about it. That is, this is a year to expect the unexpected, including a grand FX bargain. This is Paris Accord round 2 at Mar-a-Lago. How do you see that playing out? How could you see that playing out?
So I think it goes back to the original question about what's the why here. So the trade policy uncertainty, it creates a lot of tension in global markets. It sees the dollar strengthen. It sees local currencies weaken in some of these other countries. And again, you start to see sentiment and economic dynamics underperform in the currencies that are being targeted, where the trade policy uncertainty is on the rise. That is going to create a pressure point where I don't think everyone wants to accept a stronger local currency relative to the dollar to just come to the table and say, yeah, sure, we'll do that. But I think with the restructuring of the global order, with the change in the structural dynamics around trade, that pulls people into the negotiating table to say, okay, yes, our currencies are undervalued. Maybe the trade lines are not fully symmetrical. And so to get rid of this and to move into a world where things are more organized and less uncertain, what we'll do is we will agree to revalue our currencies and bring them back into line with things that are closer to fair value. And I think that's where all this goes, and a lot of the deal making would want to go.
I got to be quick. Chelsea, are you kidding me? Man City can't get it done. Can Chelsea hold off Man City?
I think they can. They got one more Man City victory in them for this year.
Okay. Fired up. Mark McCormick, thank you so much. The Toronto Dominion Bank, really, really helpful there on all the currency dynamics and the mystery of what's going on with tariffs.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.